Hello and welcome to NDTV Profit. You're watching IPO Adda, and my guest today is from Rashi Peripherals. The company's IPO is starting on Feb 7th, closes on 9th. Price band of 295 to 311 is a fresh issue of 600 crores, and that gives the company a market cap of little over 2050, around 2050 crores at the upper end of the price band. And joining me is Kapal Suresh Pansari, who is the managing director of the company, Hello. And Rajesh Goenka, who is the CEO of the company. Gentlemen, Hello. Thank you very much for joining us on NDTV Profit. Couple, let me start with the first thing. You're raising 600 odd crores. You've already raised 150 crores through a pre-IPO placement. What is the use of that proceeds?
So most of the use of the proceeds, our business is a working capital driven business, and 475 crores out of this will be used to repay the debt on the books, and the balance will be to pay off the creditors.
So give me a model of this business, because you are into peripherals, especially into ICT business. Basically, you're one of the leading, distributors of ICT in the country. So, how does the business model work? And when you say that it's for working capital requirements, where does it come into play?
Yeah, so I think I'll try to give you a snapshot of Rashi Peripherals first. So, incepted in the year 1989, Rashi Peripherals is now a 34-year young company. We are not only the largest, but also the leading and the fastest growing ICT distributor in the country. When we say ICT, basically it's IT. In common parlance, anything that is related to IT and IT products. Currently, we distribute 52 global marquee brands. Some of the big leading names that I can highlight is ASUS, NVIDIA, Dell, HP, Lenovo, Western Digital. These 52 global marquee brands, we are currently distributing from our 50 branch offices with warehouse, with service center, which is an unprecedented infrastructure in India. I repeat again that we are the company which has 50 city presence with office plus warehouse plus service center, so that our customer gets a 360 degrees experience of pre-sales, sales, and the post-sales and warranty cycle as well.
Rajesh, when you say that you are distributing this, it's not just the finished products, but also hardware parts also, is it?
Yeah, so there are two parts of the business, the verticals we have in the organization. One is called as the LIT business, where we are more parts of products like keyboard, mice, CPU, graphic cards, all this, which accounts to 46% of our top line. And balance 56% is PES, which is personal devices, cloud computing, where more of laptop, server, storage, all these products come.
Kapal, Rajesh spoke about the products which are there in there, but I've seen your peers in the industry, whether it's Reddington or Ingram, who are the peers for you, they are into mobile distribution as well. Why haven't you entered into mobile distribution?
Yeah, so if you see the landscape of the IT industry and the mobile phone, smartphone industry, it is an equal size of the business opportunity in both the segments. That's the size of the volume of both these industries. With the working capital driven organization, the intensity of the working capitals is extremely high. And with limited raw material of capital that we have, we chose to fight our battles in the IT industry and become an expert distribution company in the field of ITC only.
So, you are into distribution, you get credit from not only from the suppliers, but also from the buyers as well. You give credit to the buyers as well. So, where is this working capital coming in? Because the point is that if suppliers are going to give you 40-45 days of credit period, and you are giving the same to the buyers, where is the working capital coming in here?
Yeah. So, the third element of the working capital, apart from creditors and debtors, is our inventory. So when we get credit, we are able to buy inventory on credit from all these suppliers, so-called the global technology brands. Usually there is a transit period of about 15 to 20 days across the country where it comes to our warehouses, gets redistributed across our 50 warehouses and branches across the country. That takes time. And to have a gamut of products, solutions across price, across range, across categories, you need to hold inventory. And that's the inventory working capital is used for.
So, you'll have to pay them in 45 days, but because you have to hold the product beyond 45 days, you have to pay them.
Correct.
So, if that is the case, because you have long-term relationship with your suppliers there, why isn't that period more for the credit period?
So that's the usually industry standards. When the inventory period goes higher, obviously from time to time we keep getting higher credit supplies also. But the transition of technology is a function of supply chain mechanism. And the time it takes for the products to come to India and gets distributed, that's the model that we've built around it.
Rajesh, in this entire business, where is the scope for growth coming in? Because you are into ICT and hardware and other products which are there. How do you scale up this business going forward?
Yeah, so I think we are very fortunate to be in an industry which is ever evolving, ever technology improving and growing. With the background of 23% CAGR for last 20 years, which is a testimonial of our continued growth. The growth in the markets for simple IT demand, the PC penetration in India is still less than 15%, whereas smartphone penetration is more than 50%. So theoretically, the IT market will continue to grow. All third-party reports indicate that next few years, the IT demand will continue to grow at a CAGR of 10%. So even if I just follow the same route, we will have a double-digit growth. Second, at Rashi Peripherals, we continue to get into newer verticals, newer opportunities. So some of the verticals that we have got into in the recent past are enterprise business, where we are focusing on server, storage, artificial intelligence machines. Another vertical that we have got into is semiconductor. As you know, semiconductor 3 years back was not popular in India, but last 1 year, everyone is talking of semiconductor and there are companies.
So you're talking semiconductors as well?
Yeah, and we are already distribution partners of semiconductors for the companies who are setting up the facilities in Gujarat particularly. So that's another segment, and then we keep on exploring newer verticals, this. But currently, our new initiatives are primarily driven on servers, storage, artificial intelligence, and semiconductor chips.
How big is it in terms of your revenue currently?
That's still a very small business. Total put together is about 5 to 6% of our existing revenue. But these businesses are growing exponentially. So we hope to catch the wave and have a higher growth in these business categories.
So basically, you can target cloud and data centers where these are required.
Correct.
Absolutely.
And how do you see this business scale up, because that requires higher working capital as well?
Correct. So that's the objects of our IPO, that once we have the capital in place, we will be able to extend our purchasing capacity from these suppliers. High ASP means obviously you need to have balance sheets. I mentioned to you earlier that creditors is one of the ways that we receive from the brands. Apart from 30 to 45 days, there's also a limit based on the size of our balance sheet. Now, when this size of the balance sheet grows, we hope that our credit also will increase in that proportion.
So you've raised capital, fresh capital for working capital and paying some of your debts, and you're replacing that with equity in its place here. And when the debt comes down, what is it going to trickle down that will happen to the PAT?
Yeah, so PAT is not expected to trickle down. What happens is, because we are repaying the debt, a portion of the interest cost
will trickle down to the
will trickle down. Correct. And that impact of the PAT will improve.
What would be that? 450 odd crores. What is the average cost of interest for you?
Average cost of interest ranges between 8.25 to 8.5%.
So whatever the amount will come down.
Correct.
So the margins which you're sitting on, EBITDA margin of 2.9% for H1 and 2.7 for FY23, is there a scope to increase that in your business?
So I think the answer is very simple. IT business is an optimized business and volume driven business. So the margins are expected to remain similar only. No major variation on the upside nor on the downside. So it actually equilibrates itself. The opportunity is to scale the business. Our last 23% CAGR of last 20 years, or last 2 COVID years, if you see, we have grown by 53% CAGR for 2 consecutive years, is a testimony of the success.
Because the demand for laptops is much higher, work from home, school from home,
Correct.
Everything, right?
So even if I eliminate 2 COVID years and I go back another 20 years back, our CAGR still was 20%. So last 25 years, our CAGR continues to be 20% plus. One. Second, 2-3 reasons of growth I explained. And last but not the least, I want to add that Rashi Peripherals penetration from 50 branches currently we are invoicing or billing to 680 towns of India. 680 towns, if we all try to list on the names, we will not be able to list. And there we are doing B2B business. So it's our endeavor to continue to expand our penetration beyond our 8,400 customers in 680 towns, which will give us our continued momentum as we have been able to do in last 20 years.
Is your penetration complete, or you still need to invest in your distribution?
So what we look at India as a country that we've still not covered all of country. The distribution network is a function of the ability to reach to the customers in a given time frame. So we do a math between the sustainable break-even point and the fastest route to the market in those geographies to cover our market. So as and when the penetration and the growth of these smaller town increases, we might increase more to cater to our customer servicing.
What about B2C? Means, your online or e-commerce is around 20%, but that's not direct, I assume.
Correct. So Rashi Peripherals, to re-clarify, we are a B2B company. We sell to GT partners, more than 8,000 GT partners in 680 towns. We sell to modern trade, which is likes of Croma, Reliance, Vijay Sales, Bajaj, all these chain of stores. And third is e-commerce. But since we are a B2B company, we just sell to them. They in turn list on the marketplace and then they sell.
You like the Flipkarts and Amazons and others.
So it's more a buy and sell relationship than selling to an end customer.
And how does margin vary from each of the trades for you?
So I think there is 1 percentage point variation in each. So GT is the highest, then modern trade, and then e-commerce. But with the same breath, I would say that the cost of operations also is lower in, say, e-commerce or modern trade, because one, their business is more concentrated in few cities. They have 10 or 15 city warehouses. Second, their businesses are more seasonal, especially e-commerce. We all know that the Diwali time, it's more high peak. So overall cost of operation is also low in that case. So the net impact is there, but not very substantial.
How do you have a relationship of global suppliers, and what kind of margins that you get, and by the time it trickles down to the last, how does the margin move?
So basically, I think the story of Rashi Peripherals was when Mr. Pansari and Mr. Chaudhary set up Rashi Peripherals in 1989. They would import IT products and peripherals and sell into the country. And around 95, 96, we got our first formal distribution brand, which was ASUS. And we started today with just 10 motherboards. And I'm happy to share with you that since then, last 25 years, we continue to be the premium distribution partner for ASUS. Similarly, as we progressed, we tied up with a Swiss company called Logitech. Again, now Logitech, we are working for more than 20 years, and then Toshiba, then Dell, Lenovo, and all these companies. So every year we keep on adding products and brands which add value to our business, which adds stickiness to our customers. And today I'm happy to share with you that we have 52 global brands in our kitty to offer to our customers.
What is the kind of margin profile here from between your supplier to you and you to the end?
Yeah. So I think the overall margin, we have a single low digit margin, but as I said,
EBITDA is 2.9, 2.7%.
Gross
I'm
margin.
talking from a point of view at what margin that they give you and what margin you give to the lower end.
Yeah. So as I said, the gross margins understanding is more or less fixed. It's a low single digit. But the good thing is, good or bad, is you don't go down also. But at the same time, there's not much of a scope to scale up the margins. But what we can do is we can scale the volumes, we can improve the efficiency, and also Rashi Peripherals is on SAP HANA, which is the latest ERP. That really helps us to not only scale our business, but also improve our efficiencies.
You spoke about that, mobile system is a very high volume business, but the ticket size is as good as your laptops and others, right? Yeah. So why not look at it in it?
So what happens is in mobile phones, because the size of the industry is so large, it is very extremely capital intensive from the point of view of the number of rotations and the margins that it has. Now in this large size of market, even if our capacity we invest, we'll be merely not even 1% or 2% of the market shareholder. And our founders and our philosophy has been that any markets that we participate, we want to be among the leading and the leading players in that segment. And with mobile phones requires the intensity of capital is so high, we will be a minuscule player to be able to do any kind of value add. And therefore, we focused ourselves on the IT. But in the future, obviously, with the ability to expand and opportunity based, it's a green field for us to enter in the future.
And that will require high working capital for you. That's where my operating question comes in. What kind of operating cash flows that you generate?
Yeah. So currently, there are no operating cash flows in the organizations because we use debt and over our equity to sustain our growth and numbers. And internally, we have a benchmark of about 1:1.5 to equity on debt, based on which we participate in the business.
So you're basically maintaining that ratio which is there, but that's a limiting thing for your growth also going forward, right?
Absolutely.
At 20% growth, if you've been growing for past 20 years and you want to grow at 20% in the next 5 to 10 years, you will have to have either more equity or more debt coming in, right?
Absolutely. We always debate that if we had more capital, probably would have grown faster.
So why aren't you doing it?
Yes. So because the reason is that we have a benchmark. If we are able to, the profits that we earn out of the organization, 3.5 decades to begin with, 3.5 decades ago when the company started, the equity that is built in the organization is through plowback of entire profits over this period of time. There has been no event of capital infusion or raising a capital by selling some old assets or anything that sort of. With this capital, then the debt started to match based on the equity growth to take the higher growth. So internally also, when the profit of the organization is plowed back, we benchmark to the extent of that capital infused through profit to match the debt also. So it maintains a healthy balance and a sustained organization cost on the interest as well.
So now that you're coming to the capital markets, you will have external shareholders there. What is the kind of cash distribution policy or dividend policy that you have so far, and going forward, what is it going to be?
Yeah. So Rashi Peripherals has been historically a dividend-paying company and continues to pay dividend even today. We do not have a policy framed because it was internal as an organization. But we hope that in the future, with the guidance of our stakeholders and our investors, we'll frame an investor-friendly policy for dividend as well.
Okay. My final thing was on a stock in trade question, which is there because of the kind of value that you have, the figure which is appearing in RHP. Yeah. Your stock in trade is more than your revenues for the first half. Can you just give an explanation why it is?
Yeah.
So basically what happens is inventory is a function of sales, right? And in the RHP, the numbers that have been given for September. So September being one of the highest months of the year, it's a B2B2C month where online business and modern trade business is very high. So our numbers for September was also very high, very peak level. So inventory is also in proportion for that. So it's an exception, but over a period of the quarter, it normalizes and averages out eventually. But our average inventory continues to be around 50 days plus.
Gentlemen, it was a pleasure talking to you today. Thank you very much for joining us on IPO Adda. Rashi Peripheral IPO opens on Feb 7th, closes on Feb 9th. Price band between 295 to 311. Is a fresh issue of 600 crores. Thank you for watching NDTV Profit.